margin, you may ask yourself, what is that? Well, I used to think it was the number of dad jokes that were appreciated when my wife was giving birth. Turns out wrong kind of labor, and that margin is 0. Another week, another metric. We're back and we're looking at the different metrics we can analyze to help drive profitability in my favorite client set of books, Kenny's Beauty Salon and Plumbing Service Center. So, if you remember last time, we just finished looking at cost of sales margin, but there was still something else that was throwing off profitability. So we're going to head back in to Kenny's Beauty Salon and Plumbing Service Center, and we're going to start looking at some other metrics. Now today, we're looking at labor margin. And labor margin, you may ask yourself, what is that? Well, I used to think it was the number of dad jokes that were appreciated when my wife was giving birth. Turns out wrong kind of labor, and that margin is 0. So we're going to look at what actual labor margin is, which is how many pennies does it take to generate $1 of revenue? What percentage of every dollar it comes in is spent to generate that dollar? That's labor margin. And so to be able to do that, we're going to first come in and make sure all our tasks are done for the month. And then we're going to go right back into our metrics section of Keeper. So we're coming right back into Kenny's Beauty Salon and Plumbing Service Center. And after we make sure every task is done for the month, we're going to go into our metrics section and create a brand new KPI. Now, if you recall, Kenny's Beauty Salon and Plumbing Service Center not only does manicures, but also does maintenance work. And so first, I want to know what that cost of sales margin looked like for our maintenance division. So I'm going to come in and I'm going to create a new formula metric. And I'm going to say this is my contractor labor margin. And we're going to do contractors, which is one of my expenses, divided by maintenance income. And we'll hit go. And this is going to give us a nice pretty number across the bottom. Now for those of you that are visually inclined, we can come in here and we're going to add a new metric that is contractor labor margin. We can hit run, and it doesn't always happen out this pretty, folks, but I want you to take a moment to yourselves and just think, where might be the problem here? If you answered December, you have eyes. Congratulations. Yes, December looks extremely off. Now, this doesn't surprise me that the labor margin should be this static. Every single month, 27%. It looks to me like maybe the contractor that Kenny uses gets a flat 27% fee of everything he brings in. Great. But all of a sudden, we have 41% in December. Now, we normally wouldn't see this if we were just coming in, doing a month-end review in Keeper, or any other software if you'd like, but just coming in and doing a, let's say, 10-month review. We're going to rerun. And by coming in and just looking at our contractor expense, you know, we're going to look at the last couple months, 20, 30, 30, 32, 22. This doesn't seem odd to me to see 20, 30, 30, 32. But in December, this was the month that was way off. And that's why analyzing these metrics are going to be so important to us, is because we're going to be able to quickly visually see when something is wrong. Now, there's a couple things that could have gone wrong here. Maybe Kenny accidentally paid the vendor twice, or maybe the vendor uploaded 2 different invoices. Also, our customer, Kenny, could just be a very nefarious individual that's trying to skip out on taxes. Maybe he went in and accrued for an extra expense at the end of the year because he wanted to make sure that he paid less in taxes. Now, I'm not saying Kenny did that, but that's the sort of scruples that we need to have on our clients' financials and to make sure that the data is accurate. That being said, we now have all the information we need to know what month we need to look at, and we can come back into our review screen. And if we pull for the last 12 months and we rerun that, December is this column, we'll be able to see that it was just an expense, a journal entry that made up this entire expense, and now we can go ask our client, Kenny, about the invoices that hit here. Now, not only does Kenny do maintenance, but Kenny also does manicures. That's right, he's a multifaceted individual. So we're coming back into our metrics, And we are going to do another statistic in the sense that we're going to do manicure labor margin. And one more time, we're going to do labor, which is manicurist labor right here, divided by manicure income. Oops, if I could spell. Manicure revenue. Perfect. So now we can do that, and I'm going to create a nice new pretty visual as well, just for my manicure labor margin. Hit run, and wow. Now this is an insane graph. This tells me something is very off with the manicure labor margin. But it's hard to identify what. And this isn't necessarily going to even tell me which month to look at. Do I look at last September? Do I look at February? Are those the off months? Or do we have something going on where staff is starting to take money from the business and we need to investigate those high months? I just don't know. And so we're going to need to explore some other metrics to do that. Follow us in the next video, and we're going to explore how we can use some non-standard financial metrics to identify how we can tease out what is wrong with the labor margin.